Hey everyone, welcome to my very first YouTube video. Let me ask you a question. Why do some people and businesses grow financially while others struggle, even when they make the same amount of money? Today, we're breaking down finance in just 10 minutes. What it is, how it works, and how it controls almost every success story in business and life. Make sure you stick around till the end, because once you understand this, you'll never see money the same way again. Let's jump in. A business is an organization that takes basic resources, like material and labor, and converts them into goods or services to provide to customers. The primary goal of most businesses is profit, which is the difference between what is earned from customers and what is spent on inputs. Profit equals revenue minus expense. Businesses can be divided based on the type of activity they perform to generate income. There are three types of businesses. 1. Service businesses. 2. Merchandising or trading businesses. 3. Manufacturing businesses. Service businesses provide professional or technical services rather than physical products. Examples include banks and telecommunication companies, transportation companies, and professionals like doctors, accountants, and lawyers. Employees sell skills and time, not physical products, to achieve organizational objectives. Merchandising or trading businesses buy and sell ready-made products without changing them. Examples include electronic stores, supermarkets, and clothing shops. They act as middlemen between manufacturers and consumers. Manufacturing businesses buy raw materials and convert them into finished products to sell to other businesses or directly to customers. Examples include shoe factories, furniture manufacturers, car companies like Toyota, and metal workshops. They create new products from raw materials. All businesses rely on three functional departments to operate effectively. These departments are 1. Operations. 2. Finance. 3. Marketing. Operations handles production or service delivery and daily business activities including managing production or service delivery, quality control and assurance, inventory management, supply chain management, scheduling and workflow optimization. Finance manages money, budgeting, investments, and financial planning, including budgeting and forecasting, managing cash flow, accounting and bookkeeping, investment planning, financial reporting and analysis. Marketing promotes products or services, attracts customers, and increases sales including market research and analysis, advertising and promotions, branding and public relations, customer engagement and support, sales strategy, and lead generation. These departments work together to keep a business running smoothly, but in this channel, we'll focus on finance. People often confuse money, currency, and cash, but they are different. There are three terms to understand here. 1. Money. 2. Currency. 3. Cash. Money is anything widely accepted as a medium of exchange for goods and services, including bank deposits and digital balances. Currency is the physical or digital form issued by the government, such as dollars, euros, British pound sterling. Cash is physical money in the form of notes and coins in your pocket. So, what is finance? Finance is the management of money, how it is raised, saved, spent, invested, and controlled. In business, finance helps companies get funds, use them wisely, and grow efficiently. Finance is a science of money management, covering activities such as saving and investing, lending and borrowing, accounting and bookkeeping, budgeting and forecasting using financial modeling. Finance is broadly classified into two types based on objectives. 1. Private finance. 2. Public finance. The objective of private finance is to maximize profit or return. Private finance is further divided into two parts: personal finance and business finance. Personal finance, managing the acquisition and proper use of economic resources for individuals and households. It includes purchasing insurance to protect against unforeseen events, understanding the effects of taxes, subsidies, and penalties. Managing credit and debt, planning for large purchases such as automobiles, houses, and education. Developing savings plans, preparing for retirement or long-term financial goals. Business finance, managing funds by private business organizations. Corporate finance is a key area dealing with capital budgeting, selecting projects to invest in and determining asset values. Dividend policy, deciding whether to reinvest profits or distribute them. Capital structure, choosing the optimal mix of debt and equity to minimize cost of capital and maximize shareholder value. Public finance focuses on maximizing social welfare. Public finance studies government revenue, borrowing, expenditure, and financial administration. Central banks like the Federal Reserve, the European Central Bank, or the Bank of England play major roles as lenders of last resort and influence monetary and credit conditions. Businesses need money to operate and achieve objectives. Sources of finance are categorized into two major groups. 1. Internal finance. 2. External finance. Internal finance includes owners' personal savings, retained profits, which are reinvested earnings, issue of capital, sale of operating assets. Advantages of internal finance include it is the cheapest source, no interest or fees, no loss of control. Quick and flexible external finance includes bank loans, borrowed money, repaid with interest, trade credit, buy now, pay later, issuing shares, selling ownership to investors, issuing bonds, borrowing from investors, government grants, money given by the government for a specific purpose with no repayment needed. Short-term financing includes trade credit and short bank loans. Long-term financing includes shares, bonds, venture capital, and profit reinvestment. Finance answers 3 essential questions. How much money do we need? Where do we get it? How do we use it efficiently? Finance keeps a business alive and growing. Here's why. It ensures enough cash for operations. It supports growth by funding new projects and expansion. It enables informed decisions for owners and managers. It controls risk and prevents financial problems. And personally, when you learn finance, you control your money instead of money controlling you. Congratulations! You just learned the foundation of finance in under 10 minutes. If you want to build a stronger financial future, hit the like button, subscribe, and comment your thoughts on this video. Drop a comment below and help build our connection. If you found this video useful, share it with your friends, family, business students, or anyone who might benefit from it. Let's grow and learn together. Thank you for watching.